Invented a little over 12 years ago, Bitcoin was a new kind of digital payment system. It was created over an internet-built computing network that could not be controlled by an individual, company, or government. In truth, the trading history of Bitcoin's cryptocurrency is relatively short. Much of its asset valuing methods are still generally untested, that its real future worth is difficult to properly predict. Satoshi Nakamoto, the pseudonymous creator of Bitcoin, worked on the Bitcoin white paper a year before the 2008 financial crisis that affected mainstream markets. By the time it was uploaded to a crypto mailing list, the US government was already taking hold of the financial ecosystem. The market meltdown resulted in central banks across the globe dropping their interest rates and printing out money. Fast forward to the first week of 2021, the price of Bitcoin has reached an all-time high. Less than a month after catapulting to $20,000, it managed to go above $40,000 for the first time in history. It was only natural for experts to question at the time, if prices are on the rise, will this then lead to a Bitcoin crash? These speculations were correct. Bitcoin has dropped by 11%. But what caused the prices of Bitcoin to have rallied as much as they did in the first place? Understanding some key reasons based on experts' market analysis can give us insight into its current position. Demand from corporate buyers eyeing crypto as a blockade against inflation. Cryptocurrency is thought to be an ideal barrier against inflation, especially when only a total of 20 million bitcoins can ever be made under the original programming of the network. In contrast, central banks all over the world can simply decide to print more money through a committee vote. Large asset managers such as Guggenheim Partners and Tudor Investment have publicly announced the purchase of bitcoins or staked on prices through the use of futures contracts based on the Chicago CME exchange. Analysts at the biggest U.S. bank J.P. Morgan Chase recently predicted a price of roughly $146,000, long-term. Another factor is the decline of the U.S. dollar in foreign exchange markets. In 2020, the U.S. dollar index, an indicator of the dollar's current value against top world currencies like the Japanese yen and the euro, showed a decrease of 6.8%. This is crucial for Bitcoin since the price of cryptocurrency is primarily classified in US dollars. Possible causes for the decline of the dollar include the Federal Reserve's money printing the previous year of over $3 trillion, about 3/4 of the total amount previously produced in the 108-year history of the U.S. central bank. Recent images of protesters breaching the U.S. Capitol did little in burnishing the position of America's leadership on the global economic stage. Now, many economic predictions point towards plans of big expenditures under a Democratic-run government that would eventually lead to a new stimulus bill and possible oversized deficits in the government budget for several years. Much of the added cost can be capitalized with the aid of federal money printing. This leads to the next factor: purchases in retail. Lots of people are speculating on the prices of Bitcoin, and it has become progressively easy to purchase Bitcoin with known services like PayPal enabling its purchase last year. As of late, ByteTree digital analysts have noted that data on blockchain appear to indicate a large cluster of Bitcoin purchases in the $600 denomination, the same value as the stimulus checks that were recently sent out as coronavirus emergency aid in the US. Now let's talk about the Bitcoin crash of 2021. Recently, Bitcoin fell as much as 11%, the lowest level in 3 weeks, rocking the trust in its user base. The first hit was served when President-elect Joe Biden's Treasury Secretary nominee, Janet Yellen, suggested a call for lawmakers in the U.S. to curtail the use of Bitcoin due to its blatant use in many unlawful activities. Similar worries have been expressed in the past by major investors like Warren Buffett. In his statement, Buffett said that Bitcoin has been used to move around a fair amount of money illegally. Furthermore, Buffett stated that investors should go short suitcases, since criminal activity no longer warranted the need for cash on hand. Another factor that led to a recent decline in the value of Bitcoin, from which it recovered, is a belied report on Wednesday from BitMEX Research suggesting that a double-spend critical flaw had been detected in the Bitcoin blockchain. Double spending occurs when the same Bitcoin is spent twice by someone. The dire scenario for the electronic asset is much dreaded, and it was thought that the blockchain issue was solved when Satoshi Nakamoto published the Bitcoin white paper in 2009. Earlier attempts to introduce the electronic cash system were initially halted by exposed vulnerabilities that were said to have enabled the double spending flaw, ultimately undermining user faith in the system. A tweet from BitMEX Research stated, "It appears as if a small double spend of around 0.000620063 BTC or the equivalent of $21 was detected." Later, the trading platform said that the double spend appeared to be in the form of an RBF transaction. This occurs when a Bitcoin transaction is unconfirmed and is then replaced with a new transfer that has a higher fee. However, BitMEX's fork monitor also revealed that no fee bumps, RBF, have been detected. This led to the important question, did a double spend really happen? Reports later showed that a double spend did not, in fact, happen. According to Paolo Ardino, what occurred was that two blocks were mined at the same time, and as a result, there was a reorganization in the chain that did not cause any double spending. With Bitcoin considered the king of the cryptocurrency world, it is continuously recognized as the foundation for a new alternative in the financial structure. Because of the same solid foundation, Bitcoin can inevitably alter the nature of money in both the immediate and distant future. Please subscribe to this channel. Also, please visit littlebluepiggy.com to learn more about investing and your financial needs.